It's fantastic to be with you. And thank you to Chairman Moses Chang and CEO Clement Zhang for inviting me to be with you once again for this very important annual event on the Asian insurance sector calendar. I'm sorry not to be able to join you in person and to see old friends, but also because of the common items that are on our respective agendas. This morning, I'd like to share some insights from the AIF, the global standard setter for insurance supervision, about our current focus and in particular our perspectives on the opportunities and risks facing the global insurance sector in the post-pandemic new normal. Let me begin with an important aspect of our work, which is our global coordination role on risk assessment, specifically our global monitoring exercise, or GME. This global risk assessment informs our views on the risks and opportunities in the global insurance sector and is the basis for our collective discussions among supervisors on coordinated supervisory responses. This is an area of work that has been significantly enhanced in recent years. The GME is a key component of our holistic framework on the assessment and mitigation of systemic risk in the global insurance sector, one of the key post-crisis reforms that we adopted at the end of 2019. The holistic framework recognizes that systemic risk in the insurance sector may arise not only from the distress or disorderly failure of individual insurers, but also from the collective exposures and activities of insurers at a sector-wide level. Accordingly, the GME covers data from both individual insurers, about 60 of the largest global insurers, and aggregate sector-wide data from supervisors across the globe, covering over 90% of global written premiums. The GME therefore provides a very rich source of data that helps ensure that the international coordination of supervisory responses to help mitigate any potential systemic risk is grounded in evidence. Last year, we repurposed the GME to assess potential vulnerabilities arising from the impact of COVID-19. The analysis was concluded this year, and the data showed that in the face of significant market movements and disrupted economic activity, insurers remained both operationally and financially resilient, although noting that this was helped by unprecedented levels of fiscal and monetary support in some regions. This year, for the first time, we completed our regular GME, covering the past 2 years of data. The analysis focused on two aspects. Firstly, individual insurers with a relatively high systemic risk footprint or with large increases in particular systemic risk indicators. And secondly, it identified 3 sector-wide macroprudential themes impacting insurers, namely, firstly, the impact of the low for long interest rate environment and a related trend of increased private equity ownership in the life insurance sector. Secondly, increasing credit risk. And thirdly, heightened cyber risk. The outcome of this year's GME were recently published in our Global Insurance Market Report, or GMAR, which I would encourage all of you to read if you haven't done so already. It sets out the key financial stability priorities for insurance supervisors. I want to come back to what our assessment work says about the key risks and opportunities in the sector. But before I do so, I also wanted to touch on progress in finalizing another of our key post-crisis reforms for the IIS, which is the Global Insurance Capital Standard, or ICS. The ICS forms part of our common framework for the supervision of internationally active insurance groups, or COMFRAME, that we also adopted in 2019. The ICS is currently in the first phase of its implementation, which is a 5-year monitoring period. It will create a common language for supervisory discussions of group-wide solvency of internationally active insurance groups and enhance global convergence among group capital standards. I'm happy to say that we've seen strong participation and engagement from insurance groups around the world across all regions in the monitoring group. We're grateful to insurers who've continued to engage so constructively with this process, and I want to say particular thanks for the strong support that we've received from Hong Kong, both the Insurance Authority and the global firms that are headquartered here. And as we move to finalize the design of the ICS, it's through this participation that these insurers will have a direct hand in helping to shape this international standard. Now, with additional groups participating in year 2 of the monitoring period, plus expanded engagement, we are firmly on track to deliver a final ICS by the end of 2024, despite the challenges of COVID-19. Our executive committee, as recently as last month, reaffirmed our commitment to these ICS monitoring timelines. I now want to come back to the theme of looking to the horizon and talking about our role as global coordinator on some of these supervisory responses. Chief amongst these is climate risk, which I know is also on your agenda for discussion today. This is a key priority for the IIS, if not the top priority, given the systemic nature of the risk and what we recognize as the critical stewardship role of the insurance sector in the transition to net zero. The IIS has been working on this issue for several years, and I'm proud to say really as a pioneer among standard setting bodies on this topic. We've published guidance on the supervision of climate related risks in the insurance sector, including specific recommendations on how the existing regulatory toolbox can be used, including in the areas of risk management and own risk and solvency assessments, or ORSAs, and on the implementation of the recommendations from the Task Force on Climate-Related Financial Disclosures. In the run-up to COP26, we issued a statement that commits the IIS to further amplify our response to climate change. We've set up a climate risk steering group to accelerate and coordinate this work, and I'm very pleased that Daniel Wang from the Monetary Authority of Singapore is chairing this group, and that the Insurance Authority of Hong Kong is actively contributing to this work. Immediate next steps include, firstly, assessing whether the existing regulatory toolbox is enough by means of a gap analysis of our global standards to consider whether climate risk needs to be more explicitly addressed or whether further supervisory guidance is needed. Secondly, work to share examples of effective practices for developing climate risk scenario analysis in the insurance sector, building off cross-sectoral work of the Network for Greening the Financial System and others. And lastly, considering how best to integrate climate-related financial risks in the annual data collection as part of our own global monitoring exercise. I also want to flag our recently published report on insurers' investment exposures to climate risk, which clearly highlights the benefits of an orderly transition, both from a solvency and a financial stability perspective. Compared to an orderly transition towards internationally agreed climate targets, a disorderly transition, or a scenario whereby climate targets are not met at all, would have a 2 to 6 times greater adverse effect on sector-wide solvency. This is a powerful message, but the report also flags that there is much work to do to strengthen the analysis, not least the need for, firstly, joint efforts to overcoming the conceptual and methodological challenges of modeling this long-term non-linear effects of climate change. Secondly, a globally consistent framework for climate-related financial information, and hence our support for the formation of the International Sustainability Standards Board. And lastly, efforts to address gaps in supervisory reporting on climate risks. But monitoring the risks will not be enough. We also need concrete actions from public and private sectors alike on climate change mitigation and adaptation. In this regard, it was very encouraging, I think, to see so much progress made by industry-led initiatives such as the Glasgow Financial Alliance for Net Zero. And as a body of supervisors, we will be considering the possible ways that our members could most usefully engage with insurers on their plans for transitioning to net zero. So in the interest of time, I'll highlight some of our other strategic themes more briefly, but I did want to touch on a few, as these are important issues on our agenda, but I know also for the Asian region. So firstly, on digital transformation. Our focus here is on equipping supervisors to best support innovation through identifying hurdles to digitalization and removing obstacles, while at the same time meeting supervisory objectives of policyholder protection and financial stability. In other words, maximizing the opportunities while managing the risks of this new normal. The Asian region is clearly a leader here, and we will look to continue to learn from the leading edge work that's happening here and share it with our members more broadly. Our IIS FinTech Forum is undertaking deep dive analysis on supervisory practices with respect to various digitalization trends as a first step towards developing further global guidance. For supervisors, this new normal means undertaking supervision in an increasingly virtual setting. And that's why we will be taking forward work on the increased use of supervisory technology, or SupTech, in this context. On cyber risk, in light of the global and accelerating nature of this threat to the insurance sector, last month our executive committee resolved that cyber risk will be the next special topic of our annual Global Insurance Market Report. The work will explore the financial stability impact of cyber risk, how cyber underwriting may mitigate or possibly even amplify this risk, and how the GME could contribute to the monitoring of these issues at the global level. Financial inclusion and sustainable development remain important focus areas for us too, particularly given our broad membership. Together with our key partner, the Access to Insurance Initiative, or A2II, we help our members play their role in addressing protection gaps and achieving sustainable development through proportionate regulation and through supporting innovation. With the pandemic having exacerbated issues of social inequality, the urgency of addressing protection gaps is now more pressing than ever. So a good deal of our focus to date has been on efforts to address the climate risk protection gap, but we're also currently progressing work looking at a supervisory perspective on the pandemic risk protection gap and looking at how some of these lessons can be applied more generally to applying to tackling issues of resilience. Lastly, I also want to touch on issues of diversity, equity, and inclusion, or DE&I. I'm happy to share that the IIS has added issues of DE&I in the insurance sector as a strategic theme. We recently issued a statement highlighting the importance of DE&I considerations to the objectives of insurance supervision. Starting next year, we will consider the many interlinkages between DE&I and our work on governance, culture, and conduct, and start to share good practices on supervisory and industry initiatives to embed DE&I into insurers' governance and business models. I'm also very pleased that Helen Rowell, Deputy Chair of APRA in Australia, has recently become the IIS's DE&I champion, and I'm sure that she'll be a powerful voice in driving forward our work in this area. So thank you for the time. And in conclusion, I guess one key message for me is that a common factor in all of these issues that I've discussed today is the global nature of the risks and opportunities that the insurance sector faces in this new normal, and that the Asian region is really at the cutting edge of many of these trends. I believe our drive for supervisory coordination on these issues will not only prove key to effective supervisory responses to global challenges, but also should benefit particularly internationally active insurance groups, as over time this will contribute to reduced market fragmentation and a more common language for understanding and addressing these challenges. So thank you for the time. Once again, thank you, Moses and Clement, and your team, not only for inviting me today, but also for the excellent continued cooperation. I look forward to the important insights coming from your discussions today, and in particular to the strong collaboration going forward. Thank you very much.